G'day guys, welcome along. Jason Whitton here again, and welcome along to our Friday market update and some tips and strategies we're going to share with you weekly about how to be a professional property investor and get out there and get good results in the marketplace. What I want to share with you today is how to see the signs, or some of the signs, that are going to help us pick the bottom of a market, a real estate market, and what the time or the best time to is invest in that market, not get stuck at the bottom. And use that bottom time to get a good price, but also get the marketplace on the rise. We've done a lot of investing, especially in the discount world in positive real estate, and we've always been interested in following that 7 to 10 year market cycle in Australia. You know, the general gist of things. People talk about, property prices double every 7 to 10 years in Australia. But we ask ourselves as property investors, does that happen as a linear growth? Does it happen year on year on year? No, it doesn't. It has a dip, has a sharp rise, and has quite a flat. And if you look at a bit of a profile, you can see it sort of goes like this and then goes, upwards as we go along. And so, as a property investor, we want to get hold of the market right about there, just as it's leaving the bottom of the market, and ride it to the top. And when it gets to the top, we either refinance, or sometimes we might even sell to capitalise our money and take it to another place in space. There's a thing that I'll talk about maybe next week called the migration of money. Chasing the markets around Australia to get the maximum double down, triple down capital growth process as we follow different markets around Australia. But today I'm going to talk about the market clock and how to pick the bottom of the market, or to see the bottom of the market and make sure that we pick it on the turn, not down at the bottom. I'll give you an example. About 4 years ago, we did a property deal in Newcastle. Now, it was a fantastic property. It was severely discounted, like 20-25% off the valuation at that point in time. And we were thinking it was a fantastic deal, especially for long-term property investors. Now, we picked the bottom of the market, so we picked it around about number 6 here, so, down there. But the bottom of the market, if you want growth to continue upwards, is not the best place to to buy property. You've got to wait for the market to swing. And so we all invested in Newcastle, and money sat there for a few years, and now the properties are growing in Newcastle, and we're happy with that. Fantastic property deal, blue chip, we're happy long term, no problems at all. But if you want to continue your equity growth faster, picking the bottom is not the best place. You want to pick it as it turns off the bottom. And how do we do that? There's a couple of things that we do at Positive Real Estate we keep an eye on to see when the market, what we count, it gets into start of recovery. It's moved from 6 o'clock into the 7, 8 o'clock and starting to work for us. Okay, a few things that happen. Have a look at capital growth. Okay, so keep an eye on the areas, general areas, or even drill down suburbs. And when you start to see 2.5% growth per quarter, okay, per quarter growth, and it adds up to 10% in a year, that means the marketplace has started to move in the direction. And when we look at growth around in the Australian marketplace, it usually happens in this period of time here in about 1 to 3 years. Okay, you probably can't see that. I'll write it again. 1 to 3 years. The growth happens in a short period of time, guys, not a long period of time. Okay, and so especially in marketplaces like Sydney and Brisbane and Melbourne, even that's sometimes even a bit steeper. And so what we want to do is see, or let the market achieve its first, 5 to 10% growth in the first year, and know that the market is off and running, and then buy a property just as the market starts to run. And what else happens in those times? From the outside looking in, local people, local investors are despondent with the market. They're disappointed with the market, and they are not buying in their own locations. Okay, so it's a good time to start looking around. As we do that, as outside investors, let's say out-of-state investors come into the area, we start to stimulate economic growth, and we start to stimulate a little bit of capital growth as well. And this happened classically in Sydney when we did a deal in Dulwich Hill a few years ago, maybe 3 years ago now. And we bought a property at a significant discount, but just as the market was starting to turn. We bought really well, and I think about two and a half years later now, we've all made about $80,000 or $100,000 in equity, which we're very, very happy with, and its rental yields have gone through the roof. So we're looking at capital growth going up. We're looking at interstate investors investing in the area, because that's going to push the prices up. We're looking at auction clearance rates going above 50%. Okay, so the clearance rates start to rise, which means people are looking at buying. We're looking at local investors then start to come back into the local market, which then starts to push the market, start to get that frenzy going. Anyway, guys, I hope that was useful. I really encourage you to get along to our property investment evenings or property investment nights around the country. I know a bunch of you have already been, but hey, listen, invite your friends or come along again. They're fantastic. They'll go through all of this sort of stuff in depth, talking about the markets, talking about where to invest in Australia, talking about discount, renovation, strata, subdivision, all those sorts of things. So if you're a serious property investor or even a beginner, it's a fantastic place to come along, meet a bunch of people, get some great advice and some great help from our coaches there who are fantastic property investors themselves. So guys, come along. We'd love to see you there, and take care in the marketplace. Until next week, take care.